Well, there are two things in life that are certain: death and taxes. Everybody knows that you have to pay your taxes, but should you also be investing in your death? Life insurance policies, well, you've seen the pitch: whole life or term. Which one? Which one's right for you? So like we do every week, we check in with the pros. Spencer Houldin from Erickson Insurance Services and Sharon Emick from CBS Coverage Group. And first of all, I think it's, I don't know if the timing's all bad, talking about the death of bin Laden all through the show. Now we come to life insurance. But so let's start with whole or term. Which side are you?
Term life, which is the most affordable type of insurance, and its most simplistic form. You pay a premium to the insurance company, and if you die, your beneficiary gets the death benefit. And it's typically bought for a term between 1 year and 30 years, typically to satisfy a financial obligation, whether it be a mortgage or some other loan or a college education.
Okay. In other words, you got somebody relying upon you. Sharon?
Exactly.
Well, the other one is permanent insurance. Whole life is one of the products. You could have a universal life product. But the difference is this policy is permanent until you die. So you can't outlive the term. So one of the issues with term insurance, you can only buy it for a maximum of 20 or 30 years. Then you have to buy it again when you're much older. And then it will only last till a certain amount of time.
And then the premiums are much higher.
Yes.
But the big question for both of you is that a lot of people just think, well, I need to buy some life insurance, but they don't understand why they need it. It seems to me that people forget the fact that it's a protection. For example, if you have a young family, if you have children, you have a spouse that doesn't work. This is, it seems like, the place where you say, I need to cover this period of time. And if I die when my child's 20, well, they won't, they can fly out of the nest at that point.
That's exactly right. That's where the term insurance comes into hand, because it is actually very affordable compared to the whole life policy, which has an investment tool to it. And I think about my brother-in-law who just had a child and whose wife is staying home, which is a great luxury, but obviously finances are tight, as they are with a lot of families right now, given the economy. He can buy a term policy, so if something happens to him, since he's a breadwinner, the family has something to pay the mortgage, get the child through college. But you're right, in 25 years, maybe that need isn't there any longer.
All right. So, Sharon, but the other part, the reason why term is cheaper is because you never see any money. You're buying protection. Later, with a whole life policy, you can borrow it, you can cash it in, get cash surrender value. You've got money it's kind of like a bank account, isn't it?
Well, in one way, it's a bank account, but it also, remember, when children do grow up, they're still a married couple, and one of the spouses may not be working. Typically, it's the woman who might not or might not have earned as much money as her husband, and that policy, a permanent policy, would protect the spouse as they get older if he should die.
All right.
So it has a benefit also, not just for a family, but for a spouse.
Well, the great theory is that so I get older and then I have plenty of money, so I don't need insurance at that point. But that doesn't always necessarily work out. So when you're older, can you buy term policy?
Well, you can, but it's very expensive. Obviously, it's going to be judged on your health at the time and what your mortality rate is at the time. So the nice thing about the whole life is you lock the premium in if you buy it at a young age for the life of you. When you go try buy term insurance at the age of 65, you can get it most likely, but it's going to be extremely expensive.
What about buying a policy out of your place of work for people that are going to retire, and they take that policy with them somehow?
Well, there's a group term policy, and you can have a group policy with term insurance that allows mobility in it. Some don't. So it depends on the product that your company offers. But you're always better off having your own policy to meet your own needs. The term policy in a company is very limited. It's typically $50,000. It's really not going to cover much of a family benefit. You really need to buy much more than what you could get in a group term policy.
So, and one of the things about people in the insurance business that always has fascinated me is that you folks always have these horrible stories about somebody that was going to buy the policy and sign it tomorrow, but they died yesterday.
Would you like one? I'll give you.
Yeah, no,
that's true.
Even I have both a term policy and a whole life policy because I wanted to balance my life. You don't need to, you have to measure how much money you have, what it is you're protecting. And when you get older, if you have an estate, we all worry about estate taxes. I mean, now we know it's up to $5 million, $10 million a married couple. You never know when that's going to change.
What-
But if you have a business worth more than that, you want to protect it.
What age is it where you're too old to buy a whole life policy?
Well, depends. If you're very wealthy, you can buy it at any age. For the average American, it gets to be more expensive. Your mid-40s is really the place where you should probably buy it.
Make your decision.
Yeah, because that's the time you've already gotten successful in your career, you have a little more money, and you may be able to afford it.
All right. So term versus whole life, it's always a great discussion. Spencer and Sharon, thank you both very
Thank you.
much.
Thanks.